I'm very glad actually that we didn't raise before that. I think we would probably not be here if we had raised too early.
This is Funded, a show where founders who raised millions in venture capital share the gritty side of what it actually took to get that money in the bank. I'm Jason Ye. Not too long ago, I was trying to get my ideas funded. And back in the day, I was a VC listening to founders pitch me for money. Building one of the first vertically focused conversational AI platforms seems like a surefire way to get investors interested today. But back when Minna Song was first pitching EliseAI, years before ChatGPT was even released, it wasn't the slam dunk you might imagine. Despite being a deeply capable technical founder with a CS degree from MIT, Minna ran into the same wall so many great founders do early on. In the early days, investors doubted the market size, weren't sure about the founding team, and questioned the CEO's abilities. Convincing people to back AI long before it was trendy was harder than expected, and even Minna had to figure out when it was time to lean on others for support. Fast forward to today, and EliseAI is now powering some of the largest operators in real estate and healthcare with its conversational AI and automation platform. Even more impressive, they just closed a $250 million Series E led by A16Z. The path there was filled with moments that remind us just how hard fundraising can be, even when you're deeply capable and onto something big. Minna surprised me with a lot of the things she shared about company building and fundraising. But before we get there, I had to learn a little bit about what Minna was like long before she ever raised a penny.
As a kid, I was really interested in math and science. I was a great student, but I liked to study math and science the most. In high school, actually, my sort of superlative that I got was most likely to remember the most digits of pi. So definitely was sort of very interested in math clubs and things like that.
You think is that influenced by your parents? Like, were they scientists? Were they entrepreneurs? What did you look up to growing up?
I don't think that was really influenced by my parents. I think it was just where I sort of naturally gravitated towards the more logical side of studies.
Mhm.
My father was an entrepreneur his whole life. My mother and my father actually ran a restaurant together when I was very, very young. But then my father went on to, he was sort of a craftsman. So he made a lot of things out of leather for people. And my mother became a teacher. So I think my family definitely influenced me in that. I think some of the hardest working people. But on the math and science, my sister's very different from me. She's very, very artsy, likes crafts, similar to my father, actually.
Minna, I'm so glad I asked this question because I would have put your upbringing in a box. Honestly, I would have I looked at your LinkedIn, which is super impressive. MIT computer science. I think you did a stint at University of Cambridge for computer science. Asian, I don't know. My thought in my head was, I know both my parents were science PhDs. I studied computer science, and so my thought was that was going to be your background, and there was going to be this really interesting shift to, I don't know, entrepreneurship later on. But it sounds like you had some entrepreneurial influences when you were a kid. I'm curious, when you saw that in your head, where you're like, well, I mean, I love math and science, but this is what adults do, so this is probably what I'm going to do? Or did you think that you were going to go to advanced studies in science, be a researcher? Do you remember what you thought you might do?
I really thought I was going to be an engineer for a really long time. Actually, I really liked electrical engineering. So I actually started college as an electrical engineer. I hadn't coded before my freshman year of MIT, and then once I took my first Python class, I was addicted. It was much faster than electrical engineering, and I really loved the pace. I think I'm a New York person at heart, even though I didn't grow up here. I like shipping things very, very quickly, and I wasn't planning on becoming an entrepreneur until my senior year of college.
Okay.
I just thought I would sort of go and be a software engineer in industry, and probably would have worked at startups, but I think that was what the path I was thinking. But yeah, we never really sort of had a full-time real job after college.
Yeah, I think this is one of the things that was also very surprising for me, or just like I was just curious where this came about, which was when I look at least your LinkedIn, it's like, study MIT, Microsoft while you were at school. And then it kind of goes directly into entrepreneurship. So it does sound like you had this, well, I think I'm going to start building companies right out the gate. You'll probably have a ton of other opportunities to tell the sort of genesis story of Elise. But this is kind of where I really like pivoting the conversation and framing our chat. Yes, about your company. Yes, about you and what you do, but within the context of deciding to raise capital, right? So my first line of questioning is a little bit more about as Elise was starting, as you were thinking about working on Elise, did you know that this was going to be a company that you'd need to raise capital for, or was it like, well, we're just going to start, bootstrap and then see what happens? Because we'll jump to the end. You've raised an amazing amount of capital for this company to date, but maybe the beginning was something different. Do you remember what that thought was?
I think MIT really had this culture. Like, it's a very entrepreneurial school. There's a lot of founders. A lot of people aspire to be founders. They have a lot of founders come and speak at in various classes. And, I think they really frame the heroic founder route as the one that bootstrapped. And so in my mind, the right thing to do was actually to bootstrap and raise as little as you possibly can. I think that's actually the very wrong way to think about it, but I also think the similarly, how much money you raise is not a sign of success by any means. And so we actually didn't raise for the first 2.5 years. We were very fortunate. My co founder and I, we are both technical. We met because we studied computer science together at Cambridge when I did 1 year exchange program out there. That's how I met him. And we were very fortunate because you don't have to raise a lot of money if you can sort of build the product yourself. So we were both selling, we were both building, but it was very obvious when we needed to raise money. So 2.5 years in, we had signed several customers. We were at the point where we actually signed up the first and second largest apartment owners in the country, and it was just really the two of us. And we had just sort of started hiring our first person, and we knew that just to handle tens of billions of dollars worth of real estate assets, over 100,000 apartments running on our platform, we needed to build a team to support these massive customers and all of these residents. So that's when it was very obvious we needed to raise. I'm very glad actually that we didn't raise before that. I think honestly, I think we would probably not be here if we had raised too early. It
Can
was
I?
just very early with AI.
Yeah, I love that comment, and I just kind of want to push you on that thinking a little bit more because I've had similar thoughts for different companies. I've heard this uttered before. Tell me more about that. Like, you got all the way to your seed round, you've gotten all the way to a Series E, but you just said if we had raised earlier, we might not be here today. Like, what goes through your mind when you say that?
Yeah, I think people have to remember it was a very different time, right? Conversational AI, AI agents make so much sense right now because it's very popular. This was 2019, right? This was before ChatGPT came out. And we're also a vertical SaaS company. So this is also when investors weren't excited about vertical SaaS or vertical AI. So I just think in general, having a lot of traction set us in the right direction. I think if we had hired too early, we wouldn't have learned what we needed to as founders. We would have maybe delegated too much of the responsibility to other people that we hired. It's very similar mistakes that early founders make when they raise too much money. I think
Yeah.
it was the right time to do it for us.
Yeah.
And it created a lot of discipline. And I think it kept us in the weeds for a really long time in a healthy way.
Yeah. I think like one of the things I see and experience myself in an earlier startup is if you, let's say you did raise before you had signed all those clients, like it kind of can give you the wrong signal of oh, we already know what we're doing, and like you said, you can overhire in a direction, overhire before you like learn exactly how you should steer the ship. So it's a very good comment to make, and one that I think especially for people that haven't actually either been through the grind of like figuring it out and then raising, or haven't fallen off the cliff because they did the wrong thing. That comment can be hard to understand. And so I'm glad we spent a little bit of time around that.
Yeah, and I
Uh,
think immediately when you start reporting to somebody or feeling you know, even if they can't fire you as a CEO, right? Or they don't have control over your company, you still feel obligated to sort of do what you tell them you're going to do, but it's
Yeah.
just yourself and your co-founder and your employees. You guys are in the weeds together, and you adapt. And I think actually consistency can be quite dangerous. Like the need to be consistent is very dangerous because it means you're not taking in new information and learning and changing the path of your company. So I think in
Yeah.
that, maybe that seems silly because it's just like a psychological something that makes you think that way. It
But
is strong.
perception is reality, and I often think that. So we could say like, "Oh, it's just psychology," but honestly, like, perception of what happens is so important, especially, as you've learned in startups and fundraising.
So much
Um,
is I think so much of the outcome of a company is what forcing functions do you have?
hmm, yeah.
And investors can be a quite influential one.
So I actually wanna, like, go into this next chapter of this conversation, touching on a little bit what you described, which is like, our first valuation wasn't amazing. Weren't super happy with it. I find that in fundraisers, whether it's your very first round or a Series E, $250 million Series E, there's there's something that you have to convince the investors of, right? And it's going to be different at different stages. It's going to be different for different founders. And I wanted to read you something that I read from a Series A announcement. And so this will like bring us back to maybe your first round, but Meet Elise, founded by Minna Song and Tony Stoyanov in 2017. Meet Elise uses machine learning to fill the communication gaps between prospective renters and apartment operators. Meet Elise is an AI leasing assistant that handles the most redundant and tedious communications with prospective residents in an informed manner, which sounds like a announcement for a company that just launched in 2024 or 2025. Like you said, conversational AI, people thinking about these like things. Let's have these conversational things. I mean, it is incredible to me that in 2019 or 2017, somewhere around there, this is what you were working on. But like you said, that wasn't a thing. No one could point to like that actually being a thing. And in fact, you're using the language machine learning, which was the pre-AI moniker. And so I'd like to talk through this because what you have to convince investors of, or that sticking point, is often a thing that people don't realize will come up because it changes. And I'll tell you, we'll go through it a little bit more, but relatively less known venture capital firms, but all of a sudden in 2023, it's like 0.72, Sapphire, Alex Immerman at Andreessen. And so like there's a shift that happens. Let's go back to the beginning. Do you remember what was like a frustrating thing that you had to convince investors of?
Yeah, I think, it was market size, right?
Okay.
Because we were a single product, we were a point solution in an industry that, is one of the industries that spends the least in R&D out of any other industry, real estate. And so people were looking for the next Twilio or the next platform play, and if I could sell to 0.1% of this massive market type of pitch, right?
Yeah.
Whereas we today serve one in every 8 apartments in the U.S. and we have a lot more to go, and we want to grow a lot. That's not sort of the penetration numbers that people believed. When they hear a seed stage company pitching, everyone's meant to be very skeptical of what sort of
Sure.
penetration you can get. And over time, different investors have seen us make progress and believe it, and believe we can keep growing. But yeah, I think at the seed stage, that's a normal thing for investors to think. But yeah, it was definitely an interesting thing, and a lot of people didn't know about AI. So the impression was AI will never replace what humans can do, right? If you think about what housing is our largest expense as people. And so
Yeah.
if you think about that, that's our largest contract value. And so if you put a technology or a robot in doing the job that is a very high value contract per person, they just felt that that wasn't a replacement for what a human could do, and that people wouldn't buy into this. But lo and behold, residential real estate, housing is one of the fastest adopting industries of AI, actually. And
Yeah.
I think it was largely because we were so early, and we were able to sort of educate the industry over time to do that. So definitely a couple points that made it sticky during the first few pitches, but I think over time people have fallen into the thesis that generally fit exactly what we're doing. Vertical AI, sticky industries. Having AI agents that can really think about not just software budgets, but how do you start thinking about how does this recreate or reshape labor?
So your earliest investors, you were able to convince them around market size or AI? Like, were people leaning into? I can't imagine that people are like, "Oh yeah, AI." Like, I want to go after this. Especially, I think you have like more real estate specific investors early on. What do you think the tipping point there was?
So our first round was actually led by an angel group called Golden Seeds,
Oh wow,
and we already had lots of customers. So our several of our first customers were interested in funding us, but they weren't going to sort of lead the round because they weren't typical tech investors. So it definitely helped that the lead investors saw that our customers were using our product and they weren't just using our product. They saw the future of it. So that really helped. And then we did have a few real estate companies or real estate focused VC firms lead the first few rounds. And I think that was similarly because, they understand the size of the industry where maybe a generalist VC didn't understand it until our Series C.
yeah. I think it's really cool to show that sort of effort and how much traction you had to go convince people because whether it's a sticking point of market size or team execution or whatever, it's very hard for every investor out there to say no to real traction and real customers saying like, we want this, right? And so it seems like that was an amazing push through.
Yeah, I think it's everyone always says it only takes one. You just need one investor to say yes.
Mhm.
That was really hard for me to stomach because in a sales process, right? If especially when you're selling vertical where all the customers you sell to basically have very similar needs because they're the same type of business. If something's going wrong in a pitch and they say no, you should
Sure.
retro every single pitch, right?
Yeah.
And because it really should land, our products should land with every single customer, but it gets exhausting during fundraising, where yeah, it's true. Some people just have preconceived investors have preconceived notions. They have certain mandates. They have certain thesis that they have to invest on, and that really didn't make sense from kind of my gut feeling of how I should raise funding. So I spent probably too much time thinking about how do I handle every single objection and help tell the story of our business better. But I mean, even so, even in our Series E round, or there's still people that even though they see the growth of the company, it's just not within what they're meant to fund. So it should be fine, but it's still uncomfortable.
I think that the tone and the things that you have to do change after you raise this first $2 million because then you start getting into a cadence of raising, you know, essentially annually and like bigger and bigger amounts. It looks like you're really, really hitting your stride. And so I do want to kind of ask you at a high level, like, where did the shift go in these rounds of like, okay, well now we're less like maybe credentialing ourselves, maybe less talking about, whether we can actually get these people to buy. Is there a common theme around each round where what the sticking point was, or maybe even this most recent round? Like, not everyone is going to be like, hell yeah, I want to fund this, and there's got to be something that you need to push through or really convince people of. Any quick thoughts on what those things were?
Actually, our last three rounds were more or less we didn't run a big
Mm,
process for each one. So we had inbound interest, or we had very strong inbound interest, or they were kind of fully preempted rounds. So that's why they sort of, I guess, came every year. We actually didn't need to raise, which is the best time to raise is when you don't actually need the money, right? You have the
sure.
most leverage at that point, and it takes the least amount of time. So, I mean, our Series D closed. It was preempted by Sapphire. Maybe a weekend. It was
Yeah.
really a weekend of work, and then our Series E was actually preempted by insiders. And then we did want to go out to a couple investors and that we had just sort of known and had built a relationship and had several offers. I think we had 5 offers in total, and then just sort of picked Andreessen as the lead. I think that whole process took about 3 weeks till we were fully signed in a term sheet. And I like to keep rounds. I don't love fundraising. I'm not, it's like sales, but on steroids. And, I always say this, we have 52 weeks in a year. Spending 3 weeks is a significant amount of time, let alone I hear stories of people spending 6 months.
Yeah.
That's absolutely insane to me. I want to get back to work as quickly as I can. Um, and it still felt like a distraction, even being 3 weeks. So, but it is much faster if you're taking it when people are really like hot and ready to fund you. So,
Yeah.
yeah,
So
that's why they've been fast.
no, that's amazing. And even in preempted rounds or even in rounds where people are like excited, is valuation a sticking point? Is that something that you felt like it was a challenging part even in these weekend fundraisers? Or when you have the momentum that you do and like the excitement around the table, are you able to say like, look, I know what's fair. This is what's fair. This is where it's going to be, and allow yourself to drive that process? Or did it still feel like the VCs were kind of like holding back at that point? Do you remember those?
Yeah, no, I think when we were preempted, if it's a competitive process, you get at least a fair valuation, right? And so we were able to sort of just ask for what we wanted and what we thought was fair, or and talk to several investors and see what we think would be market. I think you can quadruple the time that you spend on a fundraise and optimize for the highest valuation, but I actually don't think how we think about valuation is always in the best interest of the employees.
Hmm.
If you are raising at a way too high of a valuation, it's not fair for the employees, right? Their strike prices are really high. You introduce a bunch of risk for taking a down round, and that could add on a bunch of to the pref stack that overall can help hurt the employees. And so when we think about it, we're like, we want something fair that fits our company. We're not going to, especially because we didn't need the money. No one ever gave us something that we were like, that's insanely low. Or we just go back and we say, that's not what we're doing, and they change their tune very, very quickly. But I don't think it's the right thing to do to optimize for the highest valuation. Actually, lots of employees I've hired or talked to said this is exactly what happened at their last company, and they had no upside because of it. They've never grew into a valuation, and their equity never grew. And I think we've been fortunate that we've just kept growing, and our valuations have kept growing in a very healthy rate.
Minna, that's like a cool reframing of a concept of not overvaluing yourself. But I've never heard anyone articulate that of like, we actually think about it from our employees' point of view. Like we want this to be meaningful to them. Like we want them to not feel like how on earth are we going to be able to grow into this? And does our equity stake have upside? And so it's not too dissimilar to thinking about yourself, or you're thinking about your investors and the up round and the next round. But I think when you reframe that in terms of how your employees are going to win alongside of you, I think that makes you make certain decisions. And I really like that. I'm definitely going to share that with more people. When it comes to the last three rounds, preempted rounds, do you have any memories that come to you of like hardest times fundraising, hardest times with investors, any gut punch moments where you're like, man, I'll never forget that because that felt like crap?
I think maybe I've blacked them out. No, I mean, there were some definitely strange moments. We're generally known by investors as being extremely capital efficient. It's somewhat of a product of one, we have a very high talent bar in the company, so we've been sort of slow to hire because we've just been very picky about who joins our team, and we're actually pretty small in terms of headcount compared to the revenue. And one investor said to us that our sales efficiency numbers were incredible. They said the word they used was inspiring. But for that reason, they actually rejected us because they were like, maybe you're too efficient and maybe this is an execution problem. And I think it's partly they also didn't understand vertical SaaS. Vertical SaaS tends to be more efficient in how you've grown. A lot of what we've grown through is word of mouth because we are highly penetrated, especially in the enterprise side of the housing market. So 29 of the top 30 operators use our product now.
Wow.
And so they all talk and they all ask what each other they're all using, and so there's some efficiencies that's created just because it's a small network and
Got it.
everyone's talking to each other or moving companies between each other, which doesn't happen necessarily in horizontal SaaS companies. So that was a weird one.
Minna's about to share a pretty wild story that shows just how unpredictable, unscientific, and frankly, unfair the venture world can be. When we get back, the story. One thing I learned running my last venture-backed startup is your lawyers really matter. Some founders like to glaze over this decision, but don't do that. It's really important. Last time I used Gunderson Detmer, and I definitely do it again. They weren't just transactional, they really felt like they were part of a team. There's a legal perspective on almost everything you're doing at a startup, so they're involved in everything from fundraising to equity comp to hiring to commercial contracts, really everything. And Gunderson is really built for the early stage. They work with more startups and VC firms than anyone else, over 3,500 companies, 500 funds, and they've been ranked the top VC law firm for over a decade. So if you're raising, scaling, or just trying not to mess up that first safe when you go out fundraising, Gunderson Detmer can help you navigate it all so you can focus on what really matters, which is building a great business, growing that great business. So if you'd like to learn more about Gunderson Detmer, check out gunder.com.
I one time had somebody, they sent us a term sheet. The valuation was low. This is very, very early on. Maybe it was a series B. And after they sent us a term sheet, we told them, hey, this valuation is quite low compared to what we're seeing in the market and what other investors are offering us. And then they gave me a presentation for about 40 minutes of how they determined that valuation, and it was sort of based on the profiles of the founders. But that's a weird thing because I can't change the profile. I'm married to my co-founder, so that was one of the things. How married co-founders, they're the rest of their portfolio. But I don't know. It was the age of us, and we were pretty young founders, so it was just a kind of a bizarre thing because it wasn't something I could really control. But that was their side of the story. So if they wanted to share that, fair enough.
All right, great example of, I'm glad you told that story too, because just great example of like the weirdest things happen. This is not a science, and like you can't fix it the way you can fix other processes. And
Yeah, I
so,
mean, that's not an execution thing.
what about on the more positive side of things? Obviously, fundraising is one of those things where even if you spend, like you said, 2 weeks on it, it just feels like a waste of time. It just feels like you're not focused on the thing you should be focused on. Any memories of like it getting done where you're like, like, do you celebrate after these rounds? Are you able to like take a step back and kind of appreciate that marker? Obviously, those who know that fundraising isn't the thing. You're not trying to get there, but do you have any positive memories from finishing out, especially this past like honestly monumental fundraise, $250 million led by Andreessen?
Yeah, we do celebrate. We actually have a tradition that we, as a company, go to the Cheesecake Factory. So it's a little weird of a tradition, but we started at our seed round and we did it we were just 3 people then, but we've done it every round since. And we were uh, probably 300 people when we closed or close to 300 people when we closed our Series E.
Is that
Uh,
Times Square? Are you in Times Square?
No, they don't have a Cheesecake Factory in Times Square. They have one in Jersey City and they have
Oh,
one in like deep Queens. And so we've gone to both of those. And it's hard because they really don't let you rent out the restaurant. It's just not their policy. But we ended up like convincing them to rent us out most of the restaurants last round because we really just took the entire place over. So we didn't know if we could actually accomplish it. And we're like, oh, maybe we can get cheesecake delivered, but it just wouldn't have been the same. So fortunately, we kept up the tradition. And honestly, Cheesecake Factory, they should have sponsored us.
they should have sponsored you. We're gonna send this to them. The last thing I want to ask is like I love your background. I love the things that you've learned and been able to accomplish here. So I was like asking people based on your experiences and the things that you've gone through. Is there any sort of advice that you like giving founders, especially when it comes to fundraising, but in company building overall? Is there something that you're like, man, I just wish people had told me this before I got started?
So this is more of a personal thing.
Hmm?
I don't know if this is really relevant to most founders I've spoken to, but maybe it will resonate with somebody. When we were starting the company, We were both software engineers, and we started a company because we wanted to bring a product into the world that changes how things are done. I didn't start the company thinking, oh, this is going to be a big company and I'm going to lead people someday. So I don't know if I if I would have been turned off by that concept, but I don't think I was naturally like the desire was to lead 300, a company of 300 people. But I've learned it over time and have done it in my sort of own way, which maybe doesn't match the sort of traditional charismatic people leader that you see on TV, or maybe the ones that are really great at fundraising and love doing that. So I don't know. It's been an interesting learning of like what it means to lead people, and I think it actually isn't the same. I don't think it's for us. It's not being a motivational speaker. It's being the one responsible for the success of the company and for all of the employees' livelihoods and all of the money, the over 400 million that people have invested in us, and even more than all of those things, being responsible for our customers' businesses and for the future of the housing and the future of the healthcare market. That's where I've sort of worked on being a leader in.
Yeah.
So I think other things, I mean, when it comes to fundraising, if it's not a natural ability for you, get a lot of help, because some people are just phenomenal at putting pitch decks together, and you don't have to do that all alone. You know, Plenty of people will go and listen to you for 3 minutes and rewrite everything that you've done. So that was really helpful. So I know Adam Newman, who's a phenomenal speaker, obviously. I was talking to him about our company, and he asked me to pitch him. It was a sort of an elevator pitch, and then he pitched it back to me.
Oh, wow.
And it was just my jaw was dropped, and I was like, you have pitched in like 3 seconds better than I have ever pitched in my whole life. And there's people that are like that can really help you form a story, because especially I think engineering founders, I don't think in stories, right? I think in very logical, this works, this doesn't, here are our problems. I'm just so in the weeds of the business that sometimes it is completely different to be outside of that. And how do you communicate that story to somebody else in a really quick fashion? So I'd probably just get help. It would be my biggest thing.
Those are, I mean, especially for maybe your peers or people that grow up with a more engineering mindset, or are the technical leaders of their companies. Both of those pieces of advice are great. It's like, I think a lot of people don't realize that even when you get to like 10 people, so much of building the company is leading people and being responsible for them, which earlier parts of our conversation show that you're really focused on that, which is amazing. And I do love this idea that you don't have to do it by yourself. Like, you don't have to like muscle through and solve the problems always. There are going to be people better than you at certain things, especially when it comes potentially to storytelling and fundraising. And so hearing someone as capable as you, who I'm sure solves problems in their sleep, say that, yeah, there are things that I'm not great at, and I was able to get bits of help here and there to short circuit the process. It's great pieces of advice.
And there are not many areas of your company that you can get help on, because, so for example, I believe that consulting often fails because, like a lot of people believe this, because really you need somebody in the weeds of your business. But actually for pitching, that's exactly what you don't need all the time, right? Because you need somebody who can step away and say, here's how I'm hearing this, as
Yeah,
somebody who's brand new to your business. So it's actually probably one of the areas where it's easiest to find help. So that's another consideration.
amazing. Well, I'll leave you here and say, like, this has been, one, an amazing conversation. Two, like, very cool to pull back the curtain on what seemed to be like a way ahead of its time startup that is now just like leading the industry for housing providers, and now more recently healthcare providers. So being able to help multifamily, single family management, but also healthcare providers is like a very cool vision of the world. That was my interview with Minna Song, co-founder and CEO of EliseAI, the leading provider of conversational AI and automation platforms for the real estate and healthcare industries. When we come back for the debrief, I'm going to pull apart some of the more insightful details of this interview that you might have overlooked. The founders I see that do best in company building and fundraising have a secret weapon. Their secret weapon is a community of people, of experts, of peers in the startup industry that they can ask for help from at any time, guide them through processes like fundraising. I wanted to make that easier for everyone else to have access to by building the Adamant Fundraising program and community. This gives you access to 75 different training videos around the fundraising process to give you that expert starting point around how to actually execute fundraising, and then access to a community where we host live pitch deck teardowns and office hours every week to make sure that you can ask the minute questions on how your deck should be better, how you should reform your strategy, how you should answer investors who are reaching out to you that you don't know how to answer. So if you want to check that out, if you want to get the secret weapon that I think a lot of the best founders have, check out adamantfundraising.com and join us today. All right, in today's debrief for this episode with Minna Song, I'm going to break things down that I wrote down as I was talking to Minna by myself. A lot of times I like bringing my producer on to chop it up and ask questions from the beginner's mindset, from someone who's outside of venture capital and startups. But I thought this episode was really insightful. Wanted to focus on a couple details that I think will be really valuable to pull apart for anyone listening. So have my notes here. The first thing that we didn't dive into fully, and it's probably maybe not uncomfortable, but just annoying to even talk about. But we touched a little bit on her early round. And her early round, she briefly mentioned she didn't get an amazing valuation. The lead investor there was an angel network called Golden Seeds. Golden Seeds focuses, from their website, it says they focus on female founders. They have different locations around the country. It can be very hard to get people excited about your idea early on, especially when what you're doing isn't in the zeitgeist and possibly you don't fit the profile of what everyone wants to back. And in this case, she was doing conversational AI before AI was really a thing that people thought was accessible. They more used the term machine learning, which I think she used in her description. But conversational AI didn't make sense. They didn't think this was a big enough market. They didn't think people would buy. And to be honest, she didn't fit the profile of the type of founder that would get this done. When you build enterprise SaaS companies, you got to be great at sales. You have to have a sales personality, maybe. You could probably tell in the interview that Minna is a soft-spoken woman who doesn't give off that hard-charging sales vibe. She's also married to her co-founder, which for some people can be a red flag or something that they just don't like backing because there are stories about this. I'll tell you a quick side story, though. In the firm that I was at, Greycroft, we had a massive win early on in the life of the fund, backing a husband and wife team, the founders of Buddy Media, Mike Lazaro. And that became a pattern that Greycroft was completely comfortable with. It's if the dynamics are right, then that can go really, really well. But if you are pitching and early on and people don't think you're sexy, you might not have a lot of options, and you might have to go with a firm that not a lot of people know about. You might not have a competitive dynamic, and you might have to raise money at a lower valuation, which is what happened with Minna Song. And so my one takeaway from that is try to be great at telling the story. Try to be great at making people attach in their mind why you're going to be able to get this done, and run a process so that you can have a more competitive dynamic. I'm not saying that those are the things that could have saved Minna from a low valuation early on, but I assume that some of those things were holding her back, and it's hard to hear and unfortunate, but of course she's doing great now, which I'm excited to hear. Next, I think one of the comments that we briefly touched on was she was surprised that fundraising wasn't sales. Even though I thought, oh, she was like enjoying sales, she kind of said, no, I didn't really enjoy sales. But sales feels much more like a scientific, mathematical problem that you can break down, as in, you know that you have a solution for their problem. And so every sale should go through as long as you execute the sales process the right way. It's like, she's like, it frustrated her that she couldn't retro, as in do a retrospective and see what went wrong during a sales call, see what went wrong during a fundraising call in order to fix the communication along the way. Some of that just isn't fixable, at least from that discrete, measurable way that sales is like, oh, they brought up this objection, I didn't have a response to that. In some ways, it's, did the story capture them? Did you deliver it in a way that made them lean in? Was this VC actually just interested? Was the VC having a bad day? Or, were they excited? Were they not excited? Do you have a process running a lot of these much more subjective elements, storytelling elements, softer elements that make fundraising a close cousin to sales, but not exactly the same? And so I thought it was a really important thing to call out, because a lot of people who are experienced in sales or understand that process might come over to fundraising and expect it to be a one-to-one match, something that they could just brute force, overpower, analyze, and get right. And it's not exactly that. And I think the extension from there that I thought was also an amazing thing to call out in the debrief was, she's extremely capable. She knows how to do certain things, and obviously she can learn how to do almost anything. And yet at some point she's like, I learned how to do sales. I got good at sales. I got good at leading sales. But when it came to fundraising, she's like, you know what? Turns out like stories are important. I don't think in stories. And so getting someone who knows how to do that better was an extremely effective use of resources and time saving on her part. And so whether it's fundraising or something else in your business that someone could do it better, someone could teach you how to do it better, I'd highly recommend you look for help around that. In this case, I also agree that fundraising is one of those things where very specialized people can help you with decks. Very specialized people can help you with strategy. Very specialized people can help you think in stories that might be more compelling. And the last thing that I'll include in this debrief, I just thought was a very cool reframe of something that's common. And we were talking a little bit about, okay, she's pushing her company forward. The fundraising is coming. The capital is flowing. People are preempting her rounds. And when she thinks about like what is right and what should she do in terms of setting valuation, negotiating the right way, she said, well, look, I really want to think what's best for my employees, right? And that means looking at a valuation that will help employees join, have options that are priced in a way where there is still upside, where that she can keep growing and that she can make that meaningful for her employees. This is no different than in terms of the output and what she has to do. This is no different than what founders think about when they're like, well, I want to make the most money, or I want to minimize dilution, or I want to do right by my investors. I need to do these things. Functionally, a lot of the things come out the other end the same way. But I just love that she's like, well, I don't want to push it too high because I want to make sure that my employees are taken care of. I want to make sure that I can get a step up in the next round so that my employees who got options before see that step up, see the momentum. I don't want to overvalue so that we can get to a great IPO or we can get to a great exit that gets everybody money from the options that they have. I think it's just a great way to approach building companies, great way to build a team, and great way to push everyone in the same direction, rowing the boat all together. Something that I think more founders could take note of and follow. So really appreciated that concept from Minna. Really, really appreciated her time. I thought this was a great episode and really just an amazing story. That's the debrief. Thanks so much for listening. If you have any questions about today's show, or maybe you're raising capital yourself and want help problem solving, you can find me on social. I'm at Jayeh, that's Jayeh on almost any social platform. And you can email me at jason@fundedpod.com. I also have a newsletter where I share tips, strategies, tactics around fundraising. You can find that and all the other ways that I support founders in their work to fundraise more effectively and efficiently at my website. That's admnt.com, short for adamant. You can find me there and figure out if there's anything that I can help you with. This episode was produced by Sam Cunningham. Thanks also to Abby Garcia from Adamant. And thanks to our amazing guest, Minna Song, for sharing such an amazing story with EliseAI. And one last thanks to our great sponsor, Gunderson Detmer, the leading law firm focused on startups and venture capital.